The gender gap. Why so many women don't invest in stocks. Gender gap. Yes, there are small differences between men and women. In everyday life, at work, in investment. It is often said that women are not willing enough to take risks investing successfully in the stock market. But that is not necessarily the decisive difference. Above all, women approach investments differently than men. They have a tendency to break down their assets. And some areas are taboo for their own expenses, such as the savings fund for their children. Although it is absolutely justified to divide up money for different areas and needs, this can of course reduce the return on investment. Probably the biggest differences between women and men when it comes to investing are on the one hand the investment goal. Women tend to want to secure themselves financially, and on the other hand the, presumably, instinct-driven thinking outside the box. Women more often than men do not want their investments only benefit personally, but also do good to others. This can apply to the closest family members as well as to the public. This can be clearly seen, for example, from the fact that women invest more often in so-called ethical, green or sustainable investments. The question that arises from these noble goals: why don't more women invest their money to escape the gender gap? To say it is because of the risk aversion of women would be too short-sighted. Rather, it is ostensibly due to the fact that women have fewer funds available than men due to the still ubiquitous gender pay gap. This of course encourages a certain reluctance. Because they don't want to gamble what little they have in a supposedly risky investment. The only problem is that the gender pay gap results in a not inconsiderable pension gap. Women are increasingly at risk of poverty in old age, even though they live longer than men. Investing is becoming a necessity for women. The solution is actually quite simple: investments generate wealth. That's a fact. And because of their reluctance, women fail to take advantage of the opportunities for financial emancipation that a targeted investment actually serves on a silver platter. However, it is fatal. For the majority of women, savings accounts are still one of the most interesting investment products. Not only are they not collecting any more interest for a long time, but are even lowering the value of the money they have saved. In contrast, the capital market has achieved an average return of 9.5% over the past 90 years, despite the great crash of 2008. Can there be a better argument for a long-term investment in the capital markets? Hardly likely. Closing the gender gap. Success factors: time and patience. The greatest weapon private investors have in the stock market is time. Time is even more powerful than the amount you invest. That is why it is particularly important for young women to invest their money in a return-oriented manner as early as possible, so please do not use the savings account. Even as a risk-conscious and conservative investor who tends to follow the buy-and-hold strategy, a 20-year-old can increase an investment of $10,000 sevenfold within 40 years. Ignoring inflation. So the best thing women can do to close the gender gap when it comes to investing is to educate themselves financially. Those who understand investments and capital markets feel less intimidated and are more willing to invest money. It is not that difficult to acquire basic knowledge. Not every investor should trade derivatives, but only know how and whether she is setting her financial course correctly. Another concept women should consider is that of passive investment. This form of investment goes well with the buy-and-hold strategy because it is about investing as broadly as possible across the entire market and then ignoring the investment. It's easier and cheaper than picking individual shares or paying someone to do it. It's also historically a more successful investment than constant buying and selling. Even stock market guru Warren Buffett was so convinced that passive investments outperform hedge funds that he was willing to bet $1 million on it. And he was right. Investments by women can compensate for the gender pension gap. The gender gap, pension, and the gender gap, investment, are closely linked in that the investment gap increases the pension gap. Over time, the gap between a small investment and a slightly larger investment becomes deeper and deeper. That simply means, if you invest little and start late, you will be able to count on significantly less money when you retire. This is due to the compound interest effect, which Albert Einstein once described as the eighth wonder of the world. And he was of the opinion that whoever understands it earns from it and who does not understand it pays for it. How does compound interest work? Understanding compound interest is not rocket science. In principle, it means nothing else than not having returns and interest paid out after a year of saving or investing, but reinvesting them. This means that every year a higher amount remains in the custody account that can be reinvested. The compound interest is when the sum earned through the one-off or annual interest is multiplied by itself in the following year. Based on an investment amount of $1,000 and an interest rate of 5% per year, savers and investors have the sum of $1,050 at their disposal after 12 months. If you have these $50 paid out, the investment can never generate more than this amount per year. If you reinvest these $50, however, compound interest becomes active, and in the second year the original $1,000 have become $1,102.50. The $2.50 are the compound interest in numbers after the second year. After 10 years, the amount invested increases to $1,621.89, after 20 years $2,653.29, and so on. Wasn't it mentioned earlier that time is the most powerful weapon in investing? In order to benefit from the compound interest effect, the duration of a savings plan is at least as important as the amount of the investment. Depending on the willingness to take risks, it is even more important. And it is thanks to the time and the resulting compound interest effect that women who start an investment as early as possible, no matter how conservative it may be, can reduce their gender pension with the help of investments. By the way, investors who would like to do even more should find out more about ordinary shares from the investment advisor of their choice. With these, they have a voting right at the annual general meeting of the company or companies in which they hold shares and can thus influence decisions on the election of women to the board of directors, for example, or the equalization of salaries for men and women in the company. In this way, the gender gap can be tackled from all sides. The three gender-related gaps, pay, pension, investment, are mutually dependent. And with smart investments, women can skillfully exploit these weaknesses.